All right, welcome everyone. This is Bob Maurer. I want to do a deeper dive into a strategy that was benchmarked recently. It is strategy number 350. It is a bear spread in the live cattle futures. So we're going to take a look at it, make sure everybody's on the same page, and I'll give you a bit of the backstory. All right, dialing into the portal. You can see it here. Actually, we're going to go right to the chart. All right, so number 350, bear spread in live cattle. Going over what's in yellow here, the risk reward. Long to August, short to June, margin requirement 455. Risk reward for regular entry, more conservative. If all you do is get in at level 2, is right here. And then risk reward for the more aggressive average in strategy, which is where you get in at levels 1 and 2 to average in. And per 2 lot at the average, this is the risk and reward. All you do is get level 1, meaning the market rallies to this blue line, falls down to the target, doesn't get to level 2. Gain would be right there. All right. That's the risk reward profile. Let's talk about the backstory on this one. This has been a profitable strategy 13 out of the last 15 years. The two losing years were 2024, so just last year, in 2013. In terms of my assessment of whether or not the chart structure that you're looking at for the spread that we'll be trading this year correlates at all to those two other losing years, I don't see a whole lot of correlation for 2013. However, I did see correlation in terms of just the entry price for 2024, but not necessarily the structure. So, not overly concerned that history could repeat itself based on doing a deeper dive into those particular years, even though they were losing years. In those years, primarily sideways market for 2024, but also there was an opportunity within the window where the market had a drawdown. So if we're looking for price improvement, if you were looking for price improvement last year, even though the trade ended up being a loser, you had an opportunity to make some money depending on where you got in. Okay, so we're looking for price improvement. So that kind of lines up well for us. And then for 2013, it was pretty much just a lower drift throughout the time frame here. So we're definitely more sideways. Okay, so that is that in terms of looking at those two losing years to see if there's heavy enough correlation to shy us away from this, and I don't see it. The benchmark to stop range, our benchmark is 157. Our stop is 382. So that equates to about a $900 move, and $900 would have been enough, was equal or better than the worst drawdowns or the worst unrealized loss for all 15 of the last 15 years. So there should be plenty of room here. Okay. There was one year that had 900, and that was in 2024, but that was a bit of a rarity. I think most of the higher end of the unrealized losses, maybe there were 3 or 4 of them that were between like 650 and 750. So $900 should be enough. Okay. So I think our stop is in a safe place. Let's put it that way. Anything can happen. So no guarantees, but just based on the data, I think that's a good spot. All right, what's our approach? We're looking to sell a bounce. Entry level 1 is positive 240. Entry level 2 is positive 282 half. Stop is 382 half. And then we got our targets down here at 105 and positive 30. Benchmark where this thing started just a couple days ago is 157 and a half. So primarily speaking, it looks to me like this is a range bound trade. You can see that the couple few spikes over the last 8 or 9 months, aside from this rally here, okay, have topped off around the 300 level. And then on the bottom side, roughly about the 100 level. So 100 to 300 seems to be the bulk of the range. And we want that to persist. And it also lines up with our seasonal tendency. We want to see a decent bounce and then a break on down. So just basically stay within the range, have a nice little oscillation. Hopefully we can bank it. All right. It would need to make a new high or just about a new high in order for our stop to get hit. If somebody wants to give it more room, so be it. If you want to raise the stop up to a higher level to make it make a new high first, that's totally trader's prerogative. These are just my recommendations based on my assessment of the data and also heavy dose of trying to come up with rational risk reward. Okay, so that's 350 bear spread, live cattle, short the June, long the August, and we'll see how things play out. Obviously, neither level has been filled as of yet, so it's pretty much just going to be a wait and see until the market accommodates and hopefully lets us in at least one of those levels. Okay. All right. If you have any questions, comments, anything of interest, feel free to reach out. I am going to leave it there. And thanks so much for watching.